Donnelly, and I am with the Donnelly Group of Keller Williams Flagship of Maryland. It is good to see you. And I am here with Pablo Alvarado with LPL Financial, and he is going to be talking today about the market. The market is absolutely crazy. I've been selling real estate for about 30 years, and I've seen the market go up and down. But right now, I have to be so close to my financial planner, my accountant, my loan officers, because so much information is changing so rapidly. And the reason that we're doing this call today is because I wanted to help people to be able to make decisions on facts versus fears. Pablo was one of the first people that I spoke to about it. And I said, Pablo, are we going into a depression? Like, I heard somebody talk today about a depression. And he said, you know what, that's irresponsible. And let me talk to you about it. So he started to tell me about this. And I said, you know what, there is so much misinformation out there, or so much massive information out there, that I wanted to put a series together for just what's going on and how to disseminate information appropriately and responsibly. So today we're going to talk to Pablo in this Zoominar, as I have coined it, and we're going to talk about just in general what the market's doing. Pablo is a financial planner, and he is with LPL Financial, and he is a principal of the company. And Pablo, fill me in. What else? Tell me a little bit more about you.
Well, thank you, Diane. I've been in the industry over 20 years, and one thing I can say is that it never ceases to amaze me. You know, there's always something that could throw things off rails, and it's been quite the journey over the last 20 some years that I've been in this business. Personally, I live here in Annapolis. I'm with my wife and my 5-year-old daughter, and a big shout out to my wife. Today is our anniversary, celebrating 7 years together.
Happy anniversary, Pablo. That's fantastic.
Thank you. I give her a lot of kudos for putting up with me. So, but with that said, you know, I love every minute of it. I love Annapolis. I love our community, and it's been so good to see everybody come together. The outpour of support for people has been fantastic.
Yeah, I've liked that too. It's one of those things where I was telling somebody it took a virus to pull us together, and all the cool things. And I think on Facebook yesterday, just thankful for all the people that are out there fighting for us. And you know, I wouldn't want to be figuring this mess out with the economy, which leads us to our first question. Despite the public health and the economic crisis that we're in right now, the stock market is coming off one of its best weeks in decades. So I was doing some research to find out what these numbers were. The S&P is up almost 25% since March 23rd, which was its low. What's going on in the financial market? And give us a recap, if you would, of the last, say, 30 to 45 days. And when you're talking to us, especially me, talk to me like we're in college and this is Economics 101.
Perfect. I don't like the technical jargon myself, so I'll do my best to avoid it. But let's go back to the beginning of the year. Right, back in January, even that's we're looking at what less than 120 years ago. We couldn't have expected this. Certainly, the coronavirus was vaguely brought up in late January. We saw a little bit of a pullback from the markets, but back then the reports were like, hey, we're not too concerned about this yet. I don't think there's anything to be concerned about. Then we came back pretty strong right into the middle of February. As the number of cases kept escalating, not just in China, but in Europe, and here in the United States, it was clear that, hey, this thing is more than what we've been led to believe. So as we proceeded to take action here in the United States and basically shutting down the economy, it threw the markets through a tailspin. To add matters worse, right in the middle of it in March, early to mid-March, we had an oil conflict between Russia and Saudi Arabia that made matters even worse. That put us right down to the March 23rd bottom that you talked about, where at that point the markets were down over 35%.
Wow.
The numbers, even though we were trying to assess what's happening, what can we do to control this thing, it was really, just a month ago, it was really unclear how severe this was going to be, how many people were going to be infected. The number of deaths the estimates were really high even back then. That's when, local governments, state governments, federal governments took swift action in closing things down in the most affected areas. Just by the fact that we shut down the economy, that just didn't give the markets a good feel.
That's when investors were getting panicky, right?
Exactly.
And in my field, in the real estate field, the mortgage banking, it was going crazy. I mean, there were loan officers who would call and say, I don't even know what to do tomorrow. Like, I'm nervous. People are calling me. They want to refinance. The investors are too scared. They don't want to buy the loans. They put everything on hold. So many things happened as a result of this that no one was prepared for. No,
right.
We just had no idea. And it happened so quickly. We had one of the strongest spring markets that we've ever had. And we went into it thinking this is going to be a blowout year, fantastic year. And then all of a sudden, everything just sort of stopped. So real estate is still happening. I want to underscore that real estate is still happening. In Anne Arundel County, the numbers were 760 new listings since March 9th to April 14th. 950 went under contract. There were 880 that sold. So real estate is still happening, but it went from a supersonic speed to pause, to concern, to what's happening, to unemployment numbers that we'll talk about in a little while. And then now we're getting into a balancing act of when do we come back and reopen our businesses and without the risk of having this disease come back. So we'll talk about that in a little bit. But right now we're looking at unemployment rates that are, I think at the Great Depression in 1933, they were about 25%, a little shy of 25%. And now we're looking at the unemployment rate was around 3% prior to, and now it's about 15%. So it jumped significantly. So I have three questions regarding that.
Sure.
The first is, what does that mean in the short term? What does that mean for the long term? Like, how do you anticipate this is going to change, and how are we going to get out of it? And are we heading for a Great Depression?
Okay. Well, let's take them one by one. Right. The first question is, what does this mean in the short term? Right. In the short term, we're going to see a parade of numbers that are not going to be pretty. I mean, we've seen them already. Just in the last 2 weeks, we've had just about 10 million unemployment claims. That right there, we know that 10 million people have said, I can't pay my bills, I need money. Right? Those are not good news. Those are not feel-good news. We're going to see companies, especially companies that were vulnerable going into this, that are unfortunately not going to be able to reopen their doors. We're going to see some larger companies that are probably going to say, hey, you know what? And we're seeing it already when they're saying our estimates for the quarter, the estimates for the year are not going to be what we were projecting because of this. We're going to see some larger companies, even some medium-sized companies say, hey, you know what? We can't meet our dividend commitments. We're going to have to cut those back. So we're going to, unfortunately, we're probably going to see some foreclosures, some people that are, that just can't make it through this.
What does it do to the economy when the numbers aren't being achieved? So the companies are making their projections. Here's what we're going to achieve. This bomb drops on them. They can't arrive at those numbers. They can't deliver what they anticipated. What impact does that have on us on a day-to-day basis?
Well, for one, usually that comes with job cuts, right? Companies have to cut back expenses, and unfortunately, that creates a cut in the workforce is usually the number one go-to.
Yeah.
And that affects everything else. I mean, it's just a trickle down effect because if people don't have the income, they can't pay their mortgages, they can't pay their rents, they can't feed themselves, they can't pay for their meds. And that affects just right there. You know, if you can't make your car payment, you can't make your mortgage payment, your rent, there are other industries that are affected by people's inability to make those payments.
Mm-hmm. Yeah, when we had spoken, Pablo, maybe right when this was hitting, when we were still in conversation about this is just a flu, I don't know why everybody's talking about this, why is this such a big deal, to you and I speaking, and we said this isn't an economic problem. Our infrastructure and our economy is fine. This is more of just an illness that will pass. And it became more because it got worse than what I think anybody anticipated. So how are you feeling about that now? Do we feel like this is a very bad economic situation that we're really going to be years and years to overcome?
There are several, we got to be careful as to where we get our information, right? Because every time there is trouble, you're going to find two opposing sides, and usually to the extremes, right? We have people that are still to this day naysayers. They say this is nothing. And we have people that say, hey, the world is ending. And so we have to be careful as to where we get our information. I tend to follow people who are cool-headed. They look at the facts and they look at the numbers, right? And right now, the research that I'm reading does not lead us to believe that this is going to be a long, drawn-out thing. We came into this with one of the strongest economies that we had seen in a very long time. Very low unemployment numbers, historically low unemployment numbers. Banks were capitalized. Real estate had made a major comeback from the last 10 years. Inventory, as you had mentioned, was very, very low. People were ready to go out and spend money this spring season. So with all of that, with all of those factors, with all the stimulus that's being pumped into the economy right now, the elements are there for a swift recovery. Some estimates are even towards the end of the year, we're going to have a strong second half of the year. I will say, though, the only caveat is this virus.
Is the virus, how long it lasts?
Is the virus itself, how long it lasts. Just today, Governor Cuomo said, hey, I think New York has gone through its worst. We've seen the worst of this virus. They're still cautious. They're calling for people to continue the protocols. And I think that's a big part. As long as we do our part, as long as we do what's asked, right? Wash your hands. Don't go outside. Don't go out if you don't have to. Don't expose yourself. Don't expose to others. I think if we do our part, we can get through this a little bit quicker, a lot quicker than if we don't.
Well, you know, Trump is in a position now where he said he's going to make the most difficult decision that he's ever had to make. And that is, do I help the economy recover right now and risk another health crisis? Because they're already talking about this coming back in the fall. Or do I keep people out of the economy still at the thought of being able to get through the virus?
Right.
Terrible decision to have to make, because either way, you're going to make a group of people unhappy. I am self-employed. You're self-employed. We want the economy to come back, but I don't want it to come back at the expense of round two and going through this the second time.
Yeah.
He's got a tough decision on his hands, and I'm glad I don't have to make that decision.
I'm glad I don't have to make that decision. The good part about it is that for right now, the recommendations are to not just reopen the economy all at once, is reopen it in stages by geographical areas that are not as affected or are coming out of being affected.
Mm-hmm.
The estimates are sometime in May. I don't know that that means May 1st yet. I think that's still being monitored daily. And we'll see how that progresses. But I don't believe at this point that there's anyone out there that's saying we're going to open the doors to everything all in one day, all at one time. So I think there's a thought process behind it that makes sense. Let's open those areas where it makes sense to reopen.
Like boating, for example. That would be a good place to start, wouldn't it, Pablo?
That sure would.
I
Or
think
liquor
that's a
stores,
good place
right?
to start. Absolutely, right. So here's another thing. We've got folks, here's the challenge for me. I do a lot of business with seniors or people who are going to be strongly impacted by the drop in the stock market. And the stock market has, although it's stronger than we would ever anticipate, at least for me, who isn't in that field, I'm shocked at the stock market. I'm shocked that it is as strong as it is, given the environment. So, what do you say to people? Let's start with this group of people. What do you say to people who are a little older? They're not in the money-making phase of their life anymore. The stock market has dropped, and they're looking at it saying, how am I going to recoup any dollars? What
Yeah.
do you say to these people, Pablo?
Well, first of all, I would say don't panic. We're never going to make a good decision by panicking, right? Taking a step back, assessing would probably be a good idea to do at this point. Um, Examine your spending right now. Where can you cut, right? You're not going to need all of your savings all at one time, right? Where can we reduce expenses? Diane, I'm going to use you as an example. During our conversations, you cut some expenses that, it was pretty significant.
Mm-hmm. I was telling some folks this morning, I was on another Zoominar. I have to remember that the phrase that I coined. My goal is to drop my operating budget by 50% and my personal budget by 50%. And right now I'm at about a third. So I've cut back significantly, and I have more cuts to do. And I'm doing it slowly. I'm doing it not slowly. I'm not doing it slowly. I'm doing it methodically. But as soon as this happened, that's the first thing that I did. Was
Yeah.
I know that has to get in line, and then put my money towards things that are giving me a return on my investment, and
Yes.
taking away things like cable TV that I can certainly live without, that I never watch anyway.
Yes.
Right. So,
Yeah,
so your advice then to the seniors, or to people that are in any phase, but certainly we're talking about the seniors, is to look at the expenses. What can they live without, even in short term, while we're going
yes,
through this? What can you drop first to get yourself back into
correct.
that stage?
Yes, as far as your investments, I think, markets like this also, as chaotic as they have been, they also present an opportunity. If you think about all of those names that you wanted to own in January, even at the highs of February that you couldn't touch, all of a sudden you have those that they're on sale. All of a
Right.
sudden you have an opportunity to move assets there. And what I'm saying to my clients is, hey, let's consolidate up. Let's consolidate our portfolios up to more quality right now, especially those names that we've always had confidence that have made it through just about anything.
So you're still confident in the bigger companies that have shown their strength through the years.
Yes.
Okay.
Yes. And the names are out there. I mean, look at your pantry and look at who's making the stuff that you're buying right now. Another thing that we have to keep in mind, this will pass, right? And we're closer to this shall pass now than we were a month ago. Now we're starting to see signs. We got to recognize the amount of effort from the pharmaceutical companies, from the medical equipment companies. There are right now, I heard this morning that there are about 70 different tests for a vaccine for coronavirus.
Excellent.
This is all in a matter of weeks, right? We could have one. In fact, Johnson & Johnson asserted that they will have one either by the end of the year or early next year.
That's great. It's good news.
That is fantastic. So when this passes, just think of the economic output to just restock our shelves.
I keep talking about that in my world, that when, as strong as we were coming into this market, into the first quarter of this market, it's going to continue. First of all, people always have to move. There are people that they are getting divorced, unfortunately. There are people that are getting married. There's people that are having children and the house doesn't fit their needs anymore. So the market is going to be pent up. We're not at a market disaster. We're on a pause right now. When our bodies get healthy again, our economy is going to follow suit quickly. I think it's going to be a quick, we talk about the V-shaped recovery, and I think that's what we're in for. We had such a sharp decline. So it was like overnight. Doesn't it feel like it was overnight?
Yeah. Yeah.
And now, hopefully, do you anticipate, you had said earlier, you think it's going to come back. Do you think it's going to be like this V-shaped recovery that people talk about?
I've heard a couple of versions. And again, it's all data dependent. It's all dependent on, how long this virus keeps affecting us. How long is this pandemic going to last?
That's the hinge pin, the time that it takes to go.
That's going to determine whether it's going to be a V-shape or a U-shape recovery. And that's something that we got to monitor daily. Certainly, all the elements aren't there for, maybe it's not a V-shape, but it's going to be a short U recovery.
What are you looking for to determine what kind of recovery this will be? What are your indicators to say, okay, we're starting to see improvement?
Well, let me first say the stock markets, they only know two speeds: better or worse, right? A month ago, they were dealing with worse. Almost every single time, the markets we don't need to wait until things are better for markets to come back. Markets only need the elements that we're going to get there before it starts making a comeback. Usually the stock markets come back long before there is a full recovery.
Okay.
So how long it would take? I mean, if we follow the guidance that if we reopen in May or early June, the second half of the year is going to be one of the strongest that we've seen in a long time. And all the elements we're starting to see that is becoming more of a possibility than it was even a week ago.
I think that's wonderful news. I love to hear that, because we're bombarded with bad news, aren't we? Bombarded with bad news, and we need to look at the data, slow down, turn the news off for a minute, decompress, go out, have some fresh air, and then look at data. And they talk about that we're in a recession, and I want to come back and see if there's any questions too, just a minute. So if you do have any questions, please feel free to put that in the chat box, and then we'll come back and get you. So, excuse me 1 second.
Let me add something too. It is also not unusual in the middle of a crisis like this, or what the market likes to call a bear market, to see a bounce and then give up some of that bounce before there is a full recovery. So we're not eliminating the possibility of that at this moment, but rather we're glad that we've had the bounce back that we've seen over the last couple of weeks. And can we sustain it? I think that's going to be data dependent. The day-to-day that we get. Governor Cuomo said today that New York, again, he feels confident that New York could start reopening in May if things continue to improve. And this is the governor that probably got the worst of it.
Oh yeah.
In his state.
Oh yeah. He was in. That was a tough thing to watch on TV.
Oh yes. Yes.
They talk about a recession, that we're in a recession, and that's just sustained downward economic activity, right? So we've seen that. And they usually say for 2 months in a row. Is that the indicator for what you guys?
They usually see 2 quarters in a row of negative
2 quarters.
Growth, right? This is certainly not 2 quarters, but the severity of this led us to say, hey, we're in a recession. People are not going to work. Things are not being produced. Things are not being sold at the rate that they were sold 2 months ago.
So it just sped it up because of the dramatic drop.
Yes.
So what is considered a depression if the recession is sustained downward economic activity? What would the depression be?
Well,
how would you define that?
Fortunately, we've only had one example, and what causes a depression? I mean, back then, I can tell you, give you a quick bullet point of what happened back then. We had overinflated economy back then. It's one of the signals. Things were so inflated that it really took the liquidity out of the system when liquidity was needed, right? When you're over leveraged several times to one, and you have a margin call, you have the piper that wants to get paid, and you don't have it. That has a trickle effect. It's like a domino effect. Super acute unemployment. You were talking about a 25% rate. It was probably the final number was probably a little higher than that, but it lasted for so long.
Yeah.
Right. We had a Federal Reserve that actually increased rates rather than lower rates, which is a big contrast of what we've seen today. We saw Congress back then actually raise taxes.
I read that, and I couldn't even fathom who made that decision.
Well, it was a tug of war between the branches back then. The general consensus was that in order to defend the dollar, we have to raise taxes and increase rates. Unemployment, again, it was acute and it lasted for a long time. Probably one of the biggest drivers that took us there that nobody really talks about is that we actually started a trade war with our trade partners. The bigger ones was Europe and Canada. We raised tariffs on imports to the United States. Between 40 and 50% were the estimates.
Wow.
So our trading partners retaliated in kind. So that dried up the food supply. All the goods got super expensive. You combine that with high number of unemployments, lack of liquidity, that's how you get there. What we're seeing today is the Federal Reserve lower rates. That provides liquidity. They took additional actions. They took about 8 different actions that is providing liquidity to the system. It's providing liquidities to businesses. It's providing liquidity to state and local governments. So it's not a gridlock. It's not a brick wall that we're hitting.
Right.
Unemployment numbers, although they are higher, Congress has provided us with 3 major stimulus. The biggest one is the CARES Act. That's not, we didn't see that back in the Depression. So those are the actions that the government and the Federal Reserve had taken have really made a big difference to both the confidence, the liquidity, and the ability for a lot of companies to survive this.
Yeah, and we're, as soon as we are done asking questions, with answering the questions, we're going to come back to talk a little bit about the stimulus package. So we're going to go into great detail tomorrow with Christy, but I do want to touch upon that because that's what's helped. That's what's keeping us afloat, right?
Absolutely.
And then I also wanted to look at a one graph that you and I spoke of that is it's a visual of things don't last forever.
Right.
Right. Angie, is there anything on the queue for questions that we could answer for you?
No questions yet.
Okay. Okay. So can you put up the graph for us? Okay. So Pablo, you want to take this from here? I think this is a tremendous graph to demonstrate and illustrate what happens in a market, in a reaction to a market. So do you want to talk about that a little bit?
Yep. So here we have 7 different crises, 7 different events that had a negative impact on the markets throughout. At this point, we're looking at the last 35 years. 1987, a lot of people may or may not remember Black Monday. The Dow Jones lost almost 25% in one day. Just think about that, in one day. So that really, did a number on the markets. The Gulf War, the collapse of long-term capital management, I remember that one. But if you look at every single event, it's had a negative effect on the markets, and that's the very first yellow circle here. We look at numbers 1 month after. Almost every single time, a month after, we see a bounce back. Sometimes it's significant, sometimes we don't see one, but the majority of the time we see one. The more compelling number to look at is what happens after a year. 70% of the time, the market has given us not only positive returns, but really, really strong returns.
I mean, look at, if I may, look at the collapse of long-term capital management, down 19%.
Yeah.
And 1 year later, up 41%.
Yeah. Yeah.
It's incredible.
It's how markets work, right? They go, oh, things are worse. They're getting worse. Oh, no, now they're getting better. And that can happen in a very, very short term. The 5 years, those are also compelling numbers, but the biggest number to look at is what happens after a year. With 7, we have a 70%, if history tells us anything, right? History may not repeat itself, but it certainly rhymes. If you look at a year after, 70% of the time, so we have a 70% probability that a year from now, we're going to be in a better position than we are right now.
That's important I think all of us on here are real estate agents right now. This is pretty important data that you can share with your people who are deciding, should I buy now or should I wait? This is pretty compelling that if you're going to be in the home for more than a year, it might make sense that you buy while the interest rates are down and the inventory is not high. Pretty compelling.
Correct. Well, if you look at this is very pegged to everything else, right? The people's confidence in the economy, low unemployment. Are we at full employment? Is that improving? If the fundamentals are improving, that affects everything else. That gives people the confidence to, go out and buy that house, go out and buy that car, go out to eat, buy the things that you want to buy. All the discretionary spending goes up.
Right. Did you guys have any questions about this graph? We had a question, will it be shared? And certainly we can share that on our page. Is there any other questions that you have? Okay. So let's circle back a minute and end on a more positive note about the stimulus package, although I'm not sure it's great news because most people I know haven't been able to get money from it yet. In fact, I think I know one person that's gotten money from it. But you don't have to go into too much detail because we're going to go into it more tomorrow.
Sure.
But what is the relief for people who are affected by coronavirus and no longer able to work?
Yes. I'll let your guest tomorrow go on the details, but I'll give you the bullet points, and there are several, so I'm going to read them. For individuals making under $75,000 a year, they will receive $1,200. for people who are married making under $150,000, they'll receive $2,400 per couple. There is an additional relief for every child that you have, you'll receive $500. Unemployment benefits, and this is a big one that most people who are self-employed are waiting for. Unemployment benefits have been expanded in some capacity to self-employed 1099 freelance contractors.
That's never been the case before, right, Pablo?
This is a very first, and Maryland, it's still working on making that available, updating the website to make this available, but I believe the number is $600 a week for 12 weeks at this point. Loans to businesses that can turn into grants if they use it for payroll, to keep people on the payroll.
Okay.
For small businesses, I believe that number is $10,000 that they can borrow. And it could turn into a grant if they use most of that for payroll. There is additional loans for businesses. For individuals, you can take up to $100,000 from your retirement plan, from your IRA, up to $100,000 with no penalty. You still have to pay taxes, but you can take up to 3 calendar years, 3 tax years to pay the taxes. So you can spread that out for over 3 years. This is a big relief for people if they need to take money out of their retirement funds to sort of bridge the gap here.
Yeah, okay. I do have a question. Tricia says, yes, I have a question. Would this graph also indicate that someone should wait a year given the increase shown on this graph? So, okay, I was going to ask that. Should they wait to sell their home in a year given the increase? Do you want to take that, Pablo, or do you want me to?
You know, why don't we take, since it's a real estate question, you probably have a better insight on that.
Mm-hmm. So I would say it depends on what their situation is. For example, if somebody is going to wait for a year, what is the reason that they're looking to move now? So is putting off their motivating reason a year, is that something that they're going to be disappointed in having to wait? Or is that something that there's really not a big motivating factor? If that's the case, waiting may be the right thing. What they don't know is when they wait a year, is that when everything is over, things are starting to come back and we're going to see more competition. So everything in real estate is based on supply and demand. The lower the supply and the higher demand, prices are going to go up. So if we're in an environment now where the public, the general public, feels fear and uncertainty, which immobilizes people and they don't want to make a move, certainly the inventory is going to be lower because people are fearful. The best time to sell a house is when the market is not saturated, which is now. So it may not behoove somebody to wait for a year because now we're waiting to see what will happen versus we know where we are now. So if you look at the data, it has not suggested that prices have gone down yet, and the market inventory is low, and the interest rates are low, which makes the housing more affordable for the larger number of people. So if we have low inventory, we have high demand as evidenced by the houses still going under contract, low interest rates, that's a good recipe for selling today versus waiting.
And I can add, I've had a client who sold their house in March, full asking for cash.
Wow.
So there are people who are still willing to buy.
Mm-hmm. Yeah, and that's the data that we will share with you when I do my segment on the real estate market and how has this affected and impacted us in the real estate market from a business perspective, but certainly from a personal perspective as well. We're going to talk about that.
Thank you.
You're welcome. Oh, I can hear you, Tricia.
I figured it out.
Anybody else have any questions? Okay, Pablo, I wanted to say thank you to you. Thank you for your time. I know things are crazy, and I just really appreciate you being willing to come out today and just to talk for a little bit. If somebody needed to get a hold of you, how could they do that?
I can on the, do we have a chat box in here? I'll put my contact info, but my cell phone is area code 843-814-0045. That's probably
Perfect.
the easiest way. And I'll put my email and website information on the chat box.
That's fantastic. And I'll upload that onto our page as well. And tomorrow we're going to talk with Christy Bennett-Rawlings. She is with Emerald Financial. She's going to discuss in detail the stimulus package. What is it? Who does it affect? Who's eligible? What are the drawbacks? What's happening with it? Is there any money? Are banks calling people back? So we're going to get into that tomorrow as well. So be sure to register under facebook.com. TDG Moves is our Facebook page, and you can get on there. And if that's it, here's Pablo. Did you put your info in there yet?
Not yet. Let me.
Okay.
I can do that before we. Oh, here it is. Okay.
And while Pablo is doing that, everybody else, thank you for coming on. I appreciate it. We're going to share this out to people. If you know anybody that is in need of financial information, please share this with them. I want people to make decisions not in fear, but in facts, with using facts and data so that they're making informed decisions. And there's Pablo's information there. If you have any other questions, just shoot him a question, an email or a call. Hey guys, thank you so much. I appreciate it, Pablo.
Thank you, Diane. Thank you very much.
You're very welcome. Take care.
Okay. Bye, guys.